Morning, everybody. How are we all doing? How is everybody this fine Thursday? Thursday is Thursday, isn't it? Yeah. Sorry about the darkness still. I have got some lights I've ordered today, but my light switch, well, something's gone wrong with the light. I don't know what it is. It's not the light. It's not the switch. Something's gone wrong. I'm in darkness in my office. And I've got this paint in my office called railings, which is not quite black, but off black. So it doesn't help having no light in a room that's painted black, obviously. But anyway, didn't really think about that when I was painting my room, streaming. Need a light room. So I decided to go black. Bit goth. I'm not, but anyway. I'll shut up now. Morning, Vitali. Morning, Evil. Morning, FTNet. Morning, Phil. If you're watching on replay, if you've got any comments, stick them in the comments section or in Discord. Today we're going to be doing normal analysis basically to start off with today. Go through the market, see what's happening, see what's coming up in the news, usual stuff. Morning, Leon. And then we're going to look at the system parameter permutation testing that I've done on the ORB strategy. I'll go through the variation that I wanted to try on the ORB strategy, but I don't think you can do it in MetaTrader 4 and 5. It's for stocks, but it's worthwhile going through the system parameter permutation testing on the standard ORB strategy so that you can see the statistics and how stops and targets, range sizes, and all of that sort of stuff affects the ORB strategy, which is why I have the SIH running the way I have it running. So we'll go through that as well, but obviously that'll be in around about half an hour or so. Somewhere between half an hour to 50 minutes, depending how much I waffle. So if you want to just watch that bit and you're not interested in the analysis, you can skip forward. If you're watching on replay, the rest of you are going to have to sit through it. Sorry. Morning, Evil. Nice spread on the FTSE. I know it's huge this morning. Yeah, really big spread this morning on the FTSE. I find the FTSE really variable. That is a very big spread today. Quite a bit of volume came in at the open, but yeah, it really changes the FTSE. The DAX is always very tight. US indices always very tight. FTSE, I've tried quite a few different brokers, and the FTSE just has a wide spread. I don't know why. It's annoying, but yeah, I mean, it just puts you at a slight disadvantage scalping, obviously. So, but not a lot you can do about that. Morning, John. So we'll kick off with the news. Today we've got the Canadian retail and unemployment claims for the US coming out at 1:30. It's the final day of the World Economic Forums. As I expected, not a lot's come out of that. It's not about individual countries and currencies. It's about general world economics. So we don't tend to get a lot of sort of new information coming out, so it doesn't really move the market much. At 4 o'clock this afternoon, we've got Trump speaking at WEF. That one we might have something coming out at, so we'll see what happens. But yeah, bear in mind 4 o'clock. So the New York session this afternoon is a little bit of an odd one because we've got unemployment claims which sometimes spike the indices before the open, meaning that the open is quite lackluster. And then we've got an hour and a half after market open, we've got Trump speaking. So the markets might want to sit around for an hour and a half and just make sure that he doesn't do something stupid at 4 o'clock. So we might find we actually kick off about 3:30. But I don't know. We'll wait and see. But obviously he's speaking. So you know what it's like with Trump. Something could come out and, you know, obviously the markets will fly off 200 ADR. So just be aware of all of that today. Morning, James. Morning, Barry. So those are the news, the planned news so far today. Morning, Mark. Tomorrow morning, we've got the Bank of Japan rate announcement overnight. Usually comes out somewhere between 1 to 3 in the morning, UK time. So that's coming out tomorrow morning, and tomorrow is PMI day. So all the PMIs come out for Eurozone, Pound, and US. So big, busy day tomorrow. That Bank of Japan rate obviously has got the potential because they're increasing to move the yen quite substantially. I managed to get out yesterday of my yen. I'm flat yen. I don't have any yen exposure on. So the pound yen, if you remember yesterday, I had the zone drawn in here. And I was looking for an exit at that double top. I got it yesterday. So that got me out with a whopping $47. But 0.2% is 0.2%, all goes in the pot. So I'm flat yen, which is fantastic because I wanted to be flat by Friday, and I am. There's an M pattern reversal going in now, potentially at yesterday's high, which is previous week high. So that's great. So I'm flat yen. I haven't got to worry about anything to do with the yen tomorrow. We'll go through all the zones in a minute and have a look at all of them. So today's breaks so far, we're long DAX and FTSE. Wow, that's a whacking great whipsaw. Look at the size of that. So absolutely no directional bias on the DAX, but a huge volume gone in at the open. There's your 5-minute ORB. Pre-market is tradable today. The 5-minute ORB is 41. So that's both tradable ranges today. Yeah, and pre-market, obviously, we're off to the upside. So we'll come back to those in a minute. Overnight news, nothing particularly exciting that caught my eye this morning. Lots of more Trump noise, but nothing really, I don't think, that's going to affect anything overnight. Nothing out of Japan of any interest either. They had their trade balance and import-export. That's going to change, obviously, if Trump decides to put tariffs everywhere, but we'll see. So, yeah, nothing overnight, really, to worry about at all. So, there we go. There's your news covered. So, we'll kick off with the positions. So, nothing new taken yesterday, nothing banked yesterday, still up 11%. Yeah, nothing particularly exciting happening on the position trading front. Just fluctuating within a couple of percent, basically, at the moment on everything that I've got open because it's just not really doing a huge amount. So I'm out of everything that I wanted to get out of. But I obviously want to get out of everything. But yeah, nothing's moving too much at the moment this week so far. We're just kind of coming back to where we were last week. So ADRs are flat this morning. There's none. We went through the weeklies yesterday. Not really much opportunity on those. RSI dashboard virtually flat. Aussie CAD is the only real extension to look at today, up at the 4-hour. That is retesting yesterday's high, previous day's high. So yeah, we're just sitting around basically at that support, top of this propulsion. So probably that, but obviously Canadian news coming out this afternoon. So that's nicely extended. You've got divergence forming here as well, which is bearish divergence. So we've got an equal high going in with a lower high on the RSI, which is bearish. So it is looking like we've got an excess of sellers in there, so it may well come down from there. I'm not in that. Swiss yen, obviously that's an extension off the back of this yen move this week. So we've had a lot of weakness in the yen this week so far. I say a lot, not masses, but obviously it has been weak. Interest rate announcement tomorrow, so I suspect this is just a profit take on next leg, but we got to wait and see what they make of it, because we were expecting them to put the interest rates up. They are putting the interest rates up. As you can see, the market not really trending anywhere on the yen at the moment. So regardless of what they're doing with interest rates, market doesn't seem particularly bothered at the minute. Obviously, the focus at the moment is all on America. So so those are your only RSIs. There's nothing really extended particularly strongly. So nothing much to look at there at all. So there we go. That's fairly nice and easy and quick today. So we've got a inside bar on the DAX, on the ORB, and we've got an inside bar on the FTSE as well. Sorry, that's the other way around, but you know what I mean. They're both inside bars. So the initial cash balance has gone in and there's no follow through. So we'll see if we can get a continuation run on it today. But we'll see where we go. Right, so I'm going to run through the zones this morning. Have a look at areas of interest from support resistance, supply demand perspective, and then we'll go and look at the ORB statistics. So I'm going to whiz through these. I'm not covering any yens because I'm just not trading the yen at the moment. It's too expensive. All the yens are long onlys from a swap perspective, and it's hard to go long against the yen when they're driving interest rates up, because that is bullish for the yen, which is bearish for everything against the yen. So I don't really know what to do with the yen at the minute. So if you don't know what to do, just let it go and focus on something else. If in doubt, stay out. I was always told, and I have doubt, so I'm not bothering. So I'm not going to go through the yens. If you want to look at any yens though, and you're in any yens, let me know and I can look at those individually. Right, so starting off Aussie CAD. Excuse me. Early morning. Up early. Dog wanted to get up at 4 o'clock. Thanks, dog. So new short gone in on the Aussie CAD. So second entry gone short. Need new sell. Highs. Yeah, so we got an obvious level support resistance. So hit it, hit it, hit it, hit it, broke it, tested, tested, broke it, accumulated around it, broke it, tested, 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 tested. This is where the point of control is, if you like. If you were to draw a volume profile on that area of price, you would see it looking something like that. That would be the point of control. So this is basically where the buying and selling action is happening. So if we get up to there, I will look to jump in on the next batch of sellers. If it goes down, I'm looking for continuation in market structure shorts. So obviously it's bearish. So I'm looking for, if you were a trend line junkie, you'd be doing something like that and you'd be going, holy crap, we've broken out the trend line, which means you'd be looking for a pullback in there on that trend. So either way, high probability it's coming down. So if we do push up into here and we get extended all the way up to there without any kind of real strong pullback, I'm going to move the zone up and look for a 50% retracement or something on that leg. But right now it's just not doing an awful lot, so I'm just waiting on that one short. Aussie Swiss, nothing to do. Zones are still in place from yesterday. It's sideways. Aussie New Zealand, nothing to do. Zones are in place from yesterday. So I'm looking to go short on this. I am short on it already. Looking to add another short somewhere up here. This is an almost impossible one to take a second entry on, because where I am, that is the obvious bounce point, but it's too close. So once you break that zone, it's just a mess here. You could look at this area here. So this bit we tapped into here, broke it, came back, retested it, slammed through it, hit it again, didn't come back and test. So this is kind of the only real bit of price action I can see that's got any kind of influence in the market. And it's there. So yes, there's an argument for taking one there, but where do you put the next one? So I'm just going to leave it as it is. It's not going anywhere anyway, so I'd much rather we come down and just start to break down, but we'll see. Can't do anything with it if it doesn't go anywhere. Aussie US have longs on at the moment. Missed target yesterday. That got close again. We've come down. So obviously this afternoon we've got unemployment claims. If we get bad numbers on unemployment, we'll be up there and I'll be out. So, and then obviously I will look into flip short. So I'm looking to flip short in here. We've got loads and loads of support resistance areas coming up, back up here. So I'm going to flip short there, just take profit on this. 5 positions. I'm not looking to get out with a load of money. I'm just looking to get out. Yeah, and then I'll start a short position and assume that we're going to get some continued US strength. But as I say, we don't know yet what's happening with the US. CAD Swiss, long entry taken yesterday, so next buy going down here. So looking for a rejection at the news spike for a second entry. There is another opportunity for one maybe there, but it's fairly close. So I'm looking basically for a continuation push on the CAD. Swiss franc announced yesterday that they're still open to negative interest rates, which is going to be more bearish than bullish. So there's, as long as we get some good news this afternoon for the Canadian dollar and the US unemployment figures help, you know, there's a good chance we get a push on the CAD and we will start that move up. But that's quite an optimistic target. Obviously, that's something that's going to take a week to get to. So we'll see where that goes. Euro odd, shorts on, hasn't moved. same zones in place. Euro CAD shorts on, not really gone anywhere since yesterday. So again, looking for the same thing. Support resistance bounce to the upside. Euro Swiss, trying to get in long. This Swiss franc obviously weakening. It's coming down today actually. So we had Lagarde announcing yesterday, or not announcing, but reconfirming interest rate drops next week for the euro. So that should be bearish euro. That will also be bearish Swiss. So I'm looking to get a long position started somewhere down here. And then there's this whole range basically to scale in to a move back up again. So I'm just going to try one there and to see if we can hold this area, which we've broken through. This is the previous resistance, which we broke through it convincingly to make a new high. And then they bought it back up twice. So if we do get to there, we know that there's a lot of buyers here looking to rebuy. So I'm looking to buy with them. And obviously, if they get run over, I'll be looking to buy somewhere down there somewhere. But we'll see where it goes. Got to get an order on first. Euro pound got shorts on at the moment. It's just not going anywhere. So just sitting there waiting for something to happen. Can't do anything with it. 5 orders on. It's just one of these horrible grindy moves that just takes forever to get somewhere. It is rolling over. So we've got a nice rollover starting to look like it might be happening. So we've put a lower low in. So we've got a high, lower low, lower high. So looking for this basically to be peak formation high and market structure basically breaking back down. So we'll see. But it's got a long way to go to get me out of this. So in fact, the best thing really would be to get a double top rejection for me to get another order on to get this average up, just so I can get out of it faster. That would be ideal. But we'll see. Euro New Zealand going sideways, same zones on as before, shorts on that. Euro US dollar, same. Nothing's moved since yesterday. Didn't quite get up to get the next order on. We're holding this high basically. So this is holding. So this is the propulsion break that broke the zone. We came back, retested, added. Yeah, so that's where the sellers are. So I am short with the sellers. We are potentially putting market structure in bullish. So if that is going to happen, and we are going to have another run up, i.e. we're going to make a ascending wedge attempt to go higher, that's where I will want to be out. Pound odd, sideways basing, want a new position on at some point. If it drops, if it doesn't drop, it's going to go to target. It's just not doing anything. Pound CAD, looking for longs. So I'm out of the last batch of longs. This area of support resistance is it's a bit of a mess, but it's really the closest and the only thing I can see. So I'm looking for this propulsion move, which actually got stomped on pretty quick, to be retested, basically. So looking for this to be the low, which holds. Just want to get along on, really. But we got Canadian news that might help this afternoon. Pound Swiss got longs on. Again, it's just stuck. Not going anywhere. Nothing I can do. So if we do break down below those lows, I'm going to need to take a new position. If we go up, I'm looking for that previous support to hold. That's where I would get out. Pound US, longs on, stuck. Got 3 positions on this one. Bit far apart these, but nothing you can do when you got big old news like that going in. So obviously looking for support to add a new position and going to try and get out in that accumulation. But again, just being a little cautious. Targets small on any positions that have got more than a couple of trades in them, because I'm just wary of what's going on with the US at the minute. We just don't know whether it's going to be bullish or bearish. New Zealand CAD out, flipped short. Second entry short is going to be here. That's a little too close, and that's what we retested. So if we do break that high, which is that support, we're coming up into this area here, which is the next potential sort of point that we will break down from. And if we're going to continue the bearish market structure that we've currently got on, obviously we should break the lows, make a new low. Therefore, I'm going to get out just in case there's a double bottom. New Zealand Swiss, looking for longs, not going anywhere at the moment. We seem to be holding this area here. I'm not going to get in for the sake of getting in on it. So I want to have more buyers on my side. And this is obviously where the majority of the buying pressure came, which is the break of those highs, which is that previous level there. So yeah, want to get down here to get long. If it breaks up, brilliant. We're going to hit that area. And then when we pull back, I'll probably try and enter in there, but we're not there. New Zealand US, shorts on at the moment. Next short going in on the start of that propulsion. So that's the supply demand area that started that move down. We've held these highs over and over again. I'm short from there, looking to get out down there again. US dollar, not being greedy, just want to make some money off of it, because at any time Trump could just go, do you know what? We're going to dump the dollar or pump the dollar. More likely pump it. But if you look at Trump's last presidency, he didn't do a very good job of pumping the dollar. Why? Because he pumped the stock market. When the stock market goes up, the dollar devalues. When the dollar devalues, the stock market goes up, and vice versa. I said that the other way around. But anyway, you get what I mean. Dollar goes up, the stock market comes down. So he's more interested in the stock market going up, because stock market pays rich people shareholders, making America great if you've got lots of money. US dollar CAD. Not offending any Americans, hopefully. Longs out of there. Looking for next short. Just stuck. So breakdown into there. Otherwise, we're coming up to retest the spike of the news. And last one, US dollar Swiss. So again, shorts on this one. Got 6 positions on this. So the goal on this is not to make money. It's to get out without a loss. And that is an obvious support resistance zone, which potentially could form a range low. But we've got news today. So today, my exposure on the US dollar at the moment is fairly mixed. So it doesn't really matter. If unemployment comes out with any force at all, some of that is going to go into profit. The rest of it is going to get scaled in. So I should be able to bank today on something. Kind of hoping we get decent numbers on the CAD, though. Long exposure on the CAD at the minute, but we'll see. So there we go. So those are the zones, all done. DAX is stuck. It's hardly even ticking, the DAX, look. FTSE, nice clean break. Spread's tighter now, look. Still 2 pips, but and yeah, 3R target. So upside and downside targets on the UK today. So DAX all-time highs and FTSE all-time highs currently in play. So yeah. So, and the same with the DAX. There's the thing that worries me about these indices at the minute is that they are incredibly extended. So, you know, we're coming on. We're in yesterday's highs, all-time highs. Obviously, are part of a 1, 2, 3, 4, 5, 6, 7, 8-day rally on the DAX. So, yeah, this thing's pretty due a pullback in it. So yeah, same with the FTSE. Look, we actually had a pullback yesterday, started, but incredibly extended. Yeah, so I think there's a higher probability of starting some move back down to the downside on these indices, but we'll see. You know, they can trend for a long time, so we'll see. Certainly not looking bearish this morning so far, are they? But we'll see where we go. Go with the momentum. The momentum is bullish. For the ORB strategy, could you use a stock screener to identify US stocks with the most volume? Yep. Then trade the 5-minute ORB on MT5 for each stock? Yep. And create a stock screener in MT5. If you want to trade stocks. I don't trade stocks though, but if you want to trade stocks, yeah. ORB is so yeah, we're done with all this now, so I'll go on to the ORB strategy. So the opening range breakout strategy is a stock strategy. It's been used in stocks for decades. It was originally created by Tony Crabell back in the 1980s. But I'm pretty sure people were trading some kind of opening range strategy way before Tony Crabell came up with ORB, because it's basically the momentum play. It's what they call the initial balance. So when the stock market bell rings, the whole premise of the opening range breakout strategy is when the stock market bell rings, that is when traders execute their orders. Yeah. So in the pits in the old days, there were hundreds of people standing around in silence waiting for the opening bell. When the opening bell went, you had open outcry, as they called it, and which is where the stock market just exploded and people started screaming and shouting at each other. That initial flurry of orders that occurs is basically whatever you've got on your books right now that you just need to get rid of, you get rid of it. So if you've got a load of orders that people have given you to say, I want to buy this, that, the other, I just want to get the order in, you just take whatever price is available. What it causes is a huge volume spike, obviously. Let me just log into my Top Step X account and then I can show you. Yeah, so if you look at NASDAQ yesterday, yeah, so that's basically what you get is that huge spike of volume at the open. Yeah, so this is the first 5 minutes of trading at the opening bell. So what that is non-directional order volume. It's liquidity. So let's say I'm a broker and I've got a load of customers that I do trading activity for, and they've given me all their orders, and I've got to buy 5,000 shares in Amazon, 2,000 shares in so-and-so. I've got to convert a load of pound into US dollar for that guy, and they just said they want it done as soon as possible. All of those, I couldn't give a monkey's what price I get. So I just go, here you go, 2,000 Amazon, what you got over there, I'll take it. Don't care. If this guy next to him is giving me a better price, whatever, I just want it done. So it's that type of order flow. So it's non-directional and it's high volume. Now, the strategy that I've been talking about, which is this Swiss study here, basically looks at using that first 5 minutes as an indication of direction. Now, their study on stocks, there's Tony Crabell's, obviously the original ORB. That's their strategy. So if it's green, you only go long, is what they're saying basically. But that doesn't make sense if you know how the market works. Yeah, that initial volume spike will be green or red, dependent on the amount of orders that are executed in each direction on each stock or index or whatever. So on an individual stock, it kind of makes sense. If at the open, Nvidia has 200 million long orders and 20 million short, something's up. Why is everybody buying Nvidia? There's a reason for it. There'll be a reason that the initial balance order flow will be more bullish than bearish. It could be earnings, it could be an announcement, it could be something else. It could be that Nvidia just got a contract with BMW to provide the new chips for the graphics, just whatever. That makes sense. In stock indices, however, you can't really say that because there's 100 stocks making up this index on the NASDAQ. And there will be order flow in both directions. So it doesn't make sense to use the direction of anything at the open as an indication of this is the way the price is going to go. Sometimes that will be true. Sometimes it won't. And I've tested all of this and it makes absolutely no difference which direction this candle goes. You can make money with this going green and you go the opposite direction. You're taking a break of this volume. That's the whole purpose is. We wait for the rubbish to get executed. The open. Yeah, this is just rubbish orders. It's just anything goes, basically. The speculators who are now looking to make money out of the market will then execute orders with more accuracy, getting the prices that they want and using a strategy to execute the orders that they've got to do for the day. And this is where normal price action takes over. And you can see the volume always drops after that initial move. Some people use the 5 minute, some people use the 10 minute, some people use the 15 minute, some traders use a 1 minute. Yeah, so if you go down onto our 1 minute chart and look at this, some people use the 1 minute ORB. Yeah, that candle, is that the 230? Yeah, so that candle there. So it's this one, which is that. Some people use that as the initial balance opening range, because if you think about it now, the difference between open outcry and the pits 15 years ago, 10 years ago maybe, was that it took a long time for everything to happen. Yeah, you would shout, notepad, shout over to the desk would place the order, done. That process takes 5 or 10 seconds to do each order. Electronically, that volume there, which is 50% of the next 1 minute's volume, happens instantly. So the argument now is that actually any unfinished business from yesterday or any initial balance orders that need to be done today are done in a minute because it's electronic, because it's all delivered by algorithms rather than people. So some people are using that. And as you can see, the 1 minute ORB yesterday gave you a beautiful 3-hour return. Fantastic. But you look at other days, the 1 minute ORB will be there. The 2 minute ORB will be there. The 3 minute ORB will be there. The 4 minute ORB will be there. And when you've built up a 5 minute ORB, then it will continue on. So there's never a right opening range to take. It's personal preference, how you believe the market works. But the typical ones that are used are the 5, the 10 and the 15, the most common. And then some people use a 30 and a 60. The 60 is classed as what they call the initial balance. So this first 1 hour candle there is what's called the initial balance candle. And it's deemed that virtually all volume for the day, or the highest volume for the day, will always be executed in the first hour. And as you can see, that is true 90% of the time. The first 1 hour candle, the initial balance, will always have higher volume than everything else. Yeah, so that is the basis of the opening range breakout strategy. There's a bull candle, and if you took the 1 hour ORB, obviously it broke long. But the problem is, because the most volume goes through in that hour, most of the movement does. So 1.5 hours to 2 hours into the market, you've seen 50% of the volume for the day gone. So it doesn't make sense to trade the hourly opening range break because you've missed it. You've missed it all. In here, on the 5 minute chart, you had loads and loads and loads of opportunity to make money. So there's a 5 minute ORB. You got at least 1.5 hours out of that one there, for example. If you'd have taken the pre-market break, you got way more, which is why I take the pre-market break. Because if, and this is the if, it's a 50-50 shot every single time. If you do not get hedged or double stopped out on the initial opening range or the initial balance that goes in that first 5 minutes, and it decides to go that direction, the risk reward is huge. You can easily get a 5R, 6R, 7R every time it does it. If it doesn't, then you can look at taking the 10 minute opening range. And if the 5 minute, and we see it so many times, today is a perfect example. Look. Yeah, you see this so much happening. The 5 minute opening range is big. The 10 minute candle is an inside bar on the 5 minute. So you're still trading the 5 minute. So if you're trading the 10 minute opening range, you're actually trading the 5 minute opening range. If you're trading the 15 minute opening range today, you're actually trading the 5 minute opening range. If you're trading the 20, the 25 or the 30 minute opening range today, you're actually trading the 5-minute opening range. So it makes sense to say, right, look at the 5-minute ORB. Let's have a crack at that. If it doesn't work out, let's look at the 10-minute ORB. The 10-minute ORB will be something like that if it's double broken. Then you look at the 15-minute opening range, and all you're doing is you're building a range out and saying, okay, when it goes, I want to be on it. But you don't know when it's going to go, and it may not go, may never go, in which case those are the days we call rotation, whipsaw, dead. Nothing you can do because you're a breakout trader. Yeah, that's what the whole strategy is all about. So what I've done is I've rebuilt the opening range breakout EA based on using range. So where are we here? So basically this document, I just shut it, haven't I? This document basically is designed for the stock market. So what they've done is they've got 7,000 stocks, and they've tested the 5, 10, 15, 30 and 60-minute opening ranges. But what they've done is they've used what's called relative volume, which isn't available to us in CFDs and is only available in stock market and futures, which is basically the relative volume is the initial volume that goes in that 5-minute candle here, yeah, compared to exactly the same yesterday, which would be there. So let me just draw a line on that. Yeah. Oh, can't draw it on the volume. That's useful, isn't it? There we go. Let's just do this. So that volume spike there, you can see that this volume spike today is bigger. So that is yesterday's opening volume. This is today's or yesterday's opening volume. It's bigger. So what they're saying is we take an average of the last 14 days, 5-minute volume, incredibly difficult to extract in CFDs or anything really, but that's what we're looking at, taking that. And then, oops, sorry. If this is above the average over the last 14 days, the probability is higher of a break and continuation in the direction of the opening range. But my testing when I was originally doing the ORB strategy development, all the system parameter permutation, the back testing, everything I did to build ORB, EA and SIH EA out, pointed to the fact that it didn't matter. Everybody, when I originally released the opening range breakout EA, said, can you put a trend filter in there? Because I only want to trade in the direction of the trend. And I said no, because it's not the strategy. This is a momentum breakout strategy. This is trending up, the DAX at the moment. I mean, it's been parabolic for 8 days. Yeah. So if you're saying I'm only going to go long on the day that this decides to pull back, you're just going to lose. So what's the odds every day of either a trend continuation or a pullback? Yeah. Just because yesterday was bullish has got nothing to do with today. Today's opening range, today's momentum, the orders that are placed by the banks today have nothing to do with yesterday at all. So it is a momentum breakout strategy. Momentum broke out long, we go long. Momentum breaks out short, we go short. Momentum breaks out long and short, you can't break out. That's it. So there's no point in saying if it goes bull, I'm only going to go bull. So if the first 5-minute candle is green, I'm going to long it. And the statistics that I've got, and I did originally, disprove that fact. And I've done the retesting here, as you can see. This is the new version of the EA, which is much simpler, stripped back to literally just do simple stuff to test statistics again. This is the direction, trade in the direction of the opening range, this column. And as you can see, I've sorted this by return on drawdown out of I think this is 442 tests, 432 tests. I haven't updated that up there. So there's 432 system parameter permutation tests done on these results. The best ones, if you look at the top 50 here, for example, that range from 7.8 return on drawdown to 4 return on drawdown. Here there are 4.7 down to 2.3, 3.6 down to 1, the NAS 5 down to 4. If you look at this column, trade in the direction of the open, the top results say don't trade in the direction of the open, but then there's some that say do trade, don't trade, do trade, don't trade, do trade, don't trade, do trade, don't trade. Yeah, completely mixed. It's almost 50-50. Why is that? Because there's only two things that can happen. So saying that if it's a green candle, I'm going to go long, all that green candle means is out of the billions of orders placed in that 5 minutes, there just happen to be a few more longs than shorts. Doesn't mean it's going long today. It means there's a few more longs than shorts in that 5 minutes. This is the rubbish. Now the real trading starts. It can go where the hell it likes. So I understand what this analysis says because it's trading individual stocks. And the reason individual stocks explode is because at the bell, if there is a big imbalance in long orders versus short orders, there's a reason. There's a fundamental behind it. But for stock indices, that isn't the case because you've got 100 different stock signals diluting that candle. S&P 500, you've got 500 signals diluting that 5-minute candle. In an individual stock like Tesla, you've just got the orders. So this makes total sense for trading individual stocks, but it doesn't make sense for trading stock indices. So this is the relative volume analysis that they've done. So what I was talking about with the volume from yesterday, the day before, the day before, the day before, average all that out. That is your average volume at the 5-minute opening range for the last 14 days. If the days is here, the probability of you making money isn't very much. If the days is here, the probability is good. That is a 1 return on drawdown. So that number there, that 1 is a 1 return on drawdown in my column. As you can see, I can achieve way better than that. And it goes up and up and up. When you've got a 3,000% increase in volume at the open above the norm, there's a high probability it's going to fly. It's already flown. So it makes sense to follow this in stocks, but because we can't replicate this in the CFD market in any form, because there is no centralized volume, it's very hard to do a study and build any statistical analysis out with the opening range breakout EA, for me anyway. So it is something that's worth looking at if you want to trade stocks. The main problem with this, and I love this sort of strategy because it's completely scientific and it's really simple. What they're saying is look at one candle with no indicators attached and make a binary decision. The robustness of that type of strategy, because it has one signal, is phenomenal. Yeah, it will work in the future. Yeah, and look at the returns, absolutely amazing. But the problem with this is you've got 7,000 stocks. Okay, out of those 7,000, you're going to whittle them down based on their market cap, based on their daily traded volume, based on their ATR, or rather the ADR 14. So there's multiple filters that they've used in this study to filter out good quality, high liquid stocks, which is exactly what you should do. That's exactly what I was taught to do when I was trading stocks. You have a target list and you forget everything else because you're interested in stuff that's moving. The problem is you're going to need to trade 20, 30, 40 of these a day. Without automation, you can't do this. So this strategy is unexecutable unless you have automation to do it for you. Because for you to be able to screen 7,000 stocks at the 5-minute ORB, get those results out, go to your platform, find the stocks, place the orders before the next tick. Yeah, let's say the 5-minute ORB candle closes like that. You got to place an order there now. On that second. It's not going to happen. You're not going to get the orders on. So it's a great system and a great strategy, but from an execution perspective, it works lovely in backtesting, but you can't get it on. So you've got to build some kind of futures API automation system to do this. So there is a possibility of building something in MT5, but the problem is volume. So you've got to have centralized volume from the Chicago Mercantile Exchange to get this data. So it's an incredibly complex and difficult system to build. But look at the return versus S&P. It's phenomenal. So it works very, very well. So what I decided to do was twofold. I started to look at the different ranges and a way to utilize the opening range breakout strategy that I have to try and generate better returns using stop loss based strategies. Now, what their study decided to use was a 0.1 ADR stop. Yeah. So using ADR on the daily time frame, this says ATR, but it is the ADR of the daily time frame. You basically, when you get into your initial opening range here. Now, the way that my strategies work is we use opposite end of range. But what they're saying is to just use 0.1 ADR. So your downside is limited. The advantage of this is you've got a maximum loss that you can take, regardless on the size of the range. The downside to it is if you get a big range and it wants to pull back inside that range, it will stop you out before it goes. So there's always a plus and a minus. And when you're using a stop loss, it's usually a minus. So what I've done is I've put together this EA. And what this does is it's based on the Swiss Army knife EA. But what it does basically is it allows you to take the 5-minute ORB, and all it does, and it will also take a 10, 15, 30, and a 60 if you want it to. And you can test, I can test those individually, do whatever I want with it basically. But basically what it does is it takes that 5-minute opening range and it applies my filter that I use in SIH for maximum range size. So what I've done is I wanted to know, because we can't use volume, I needed an alternative. So if you get a big candle, typically that is indicative of large volume. Yeah. So if there's a large opening range, there's usually a large volume goes with it. It's not always the case, because it could be that there's just a load of buyers and no sellers, but there's actually low volume. But what we're looking at and what we can measure within MT4 and MT5 on indices is the size of this range. So I did an analysis looking at what size of range should we use on the 5-minute candle. Then I used if it's green, should we go long only, or should we just ignore the color and take whichever direction? And then I also looked at, if we break in one direction, should we then delete the opposite order and say, as we've got to move up and we're breaking this way, we won't try and go that way? Or if we stop out on that one, should we then try and do a short? So the system parameter permutations that I ran were, where's my spreadsheet gone? What size of stop loss should we use? Yeah. Ranging from 0.1, 0.2, and 0.3 of an ADR. What is the maximum range size that we should trade at the open, ranging from 0.1 to 0.4 ADR? So that's 10 to 40% of the average daily range. Because we're using a 40% maximum, there was no point in testing any stop losses above 30%. Yeah, because otherwise then we're going to be outside potentially of the range that we're trading, which means you have a stop down there and a stop up there, which means you will just get hedged. Yeah. So I then tested whether we should use a take profit or not. The way I did that was saying, should we use a 0.3 take profit, 30% of the average daily range? So if we were, for example, having a range like that, and we are risking 0.1 when we break, should we go for a 3R, a 4R, a 5R, a 6R, a 7R, all the way up to a 9R, which is 1 ADR? Yeah. So I tested the TP levels as to which would be the most effective to use. Whether or not when we take a trade, we should delete a pending. So just to confirm the functionality, as soon as that 5-minute opening range candle goes in, the EA automatically places pending orders to go long and short at the extremes of that range. So if we break that way, should we delete the pending order here, or should we leave the pending order there? And then trade direction. If we get a bull candle, should we only go long, i.e. delete that pending order, or should we go long or short and let it decide for us, let the market decide? So those are the system parameter permutations that I tested. I also tested a martingale factor with this, because the reason I wanted to see if this was a viable option for this strategy is because the strike rate of the ORB is around about 33%. Yeah. So 33%, i.e. 2 out of 5 days, typically you get a clean break that goes to 5R. So you get a big break. That's the edge. So I decided to test the fact that we've got a roughly 33% strike rate on the strategy. If we have 3 losing days in a row, should we try some kind of loss recovery system? So rather than just going straight for martingale, I decided to test all the variants of gradual price increase. So not using any kind of lot multiplier was a martingale factor of 1, and then a small increase, a bigger increase, slightly bigger increase, all the way up to martingale, which is 2. And what this is doing is it places the pending orders. You only trade twice a day. So you go long, and then you go short. If they both stop out, today was a dud. Yeah. So tomorrow we will place the same orders, but we will use a slightly larger lot size. So it's lot multiplication, but the next day is when it starts its multiplication. It won't go long there with 1 lot. If that stops out, it will go short there with 1.2 or something. Yeah. So both of these are placed at exactly the same. Because the idea is if that one fails and this one works, we just need a 2R to break even, don't we? But we close out. The other thing that this strategy is doing is it's closing at end of day. So every day, the strategy will close the trades. So I'm just going to quickly run it just so you can see. And I've just amended the EA, so I just need to quickly do that. Just make sure the settings for optimization are as they should be. Lot multiplier of 1. I'll put that to 1.5 or something, just so you can see. Exit end of day is true. 6 o'clock, that's wrong. It should be 23 for the US. So we're basically closing out end of session at US. I think that's it. No trailing stop. Next thing I'm going to test is trailing stop as well, which is just trailing to break even on the ones that work, just to see if there's a way that we can, when we've got a decent set, when we can reduce that risk down. So if you do get a clean break that goes halfway and then fails, we take a full loss at the moment. If we get a clean break that goes halfway and then fails, we could reduce that stop down to break even and lose no money. So there is an opportunity to use that as well. But I would need to set that after we've decided on what's the best ranges to use and everything. So basically the way it works is we're trading NASDAQ. It's going to take the 5-minute ORB. So I'm going to quickly show that. You can see down here. No, you can't. Can't see down there, but that says volume. So what I'm actually doing is I'm pulling in the volume as well. So you can see the volume there is 170 at the moment. You might not be able to see 159. So this is the pre-market volume. You can see there is very low, and I wanted to see how the volume compares in CFDs to the volume in futures, to give me an idea. And the correlation is there. The numbers are totally different, but the correlation is there. When you get twice as much volume spiking on the futures market, you get twice as much volume spiking on your CFD. So we could possibly use the built-in volume function, although it is just delivered by the broker. But all brokers do get extra volume at the open, so we can use that potentially as a filter. But let me just whiz through and get to the first open. So volume is currently sitting at 660-ish. There you go. So we got a move coming in there. That is 130. That's news. So that'll be a 130 news event. Volume spiked to 1700. So we do get those volume spikes coming in. Right. So there's your 5-minute ORB. Yeah. So that's the 5-minute open. The lines are green, meaning that it's within the range constraints that are set. I'm not sure which I've got set up, but it's within that. So it took a long, basically, as soon as that candle closed. And this is what I mean. So that candle closed there. With the strategy, you've got to have the order placed immediately. So as soon as that candle closed, that order was placed straight away. Unfortunately, it broke immediately and then stopped that trade out. So we've left the short on. Yeah, and you can see there's the TP down there. I think it's got probably set to 4R or something at the minute. But we'll see how the short break goes if it gets it. But it didn't get it. Yeah. Now, this is a prime example of why with the ORB strategy that I currently run with my EA, I use opposite end of range as a stop, because this happens a lot. The 5-minute opening range goes in, it pulls back inside the range, and if the direction of the opening range is the way that we're going today, i.e. it was green because there is more buyers than sellers interested in the market today, and it's not just junk orders, we will probably go like that. Yeah, because they're going to add into their initial order flow, and they're going to add more orders in. And then when we break that level, they're going to add more orders, which is why you get a pop. So unfortunately, that one stopped out because we're using 0.1 ADR as a stop loss, but we are only taking small losses. If it breaks clean on the 10-minute candle, your R is done. That target's already hit. Yeah, so you can see that's a 4R target already hit if we hadn't have stopped out, but we did. If we remove that, move that down to there, we've got to go twice as far to get the same reward. So there's always a payoff between risk and reward, but that hasn't triggered the low order there yet today. So let's just see how it plays out for the day. There we go. So we triggered the low and we got stopped out, and that is end of session. So this is a rotation day. Yeah, it was a clean break and it did go to 4R, but our stop was too tight. So if you increase your stop, you will increase your target, which means you wouldn't have hit target, which means you would have basically had a double stop out day anyway. So rotation days, we know, aren't good for trading ORB, but there are instances when you can get those working as well. So that's basically how it works. I just want to see if I can get one on so you can see. There we go. Clean break, right? So there's your clean break, straight up, opening range, broke the opening range, went straight to target, done for the day. Short order still in place. So again, one of the permutation tests is, should we or should we not delete those orders when we trigger that order and when we close that order? The results are mixed. So some days it's good to do that, some days it's not. So as you can see, when we get moving on throughout the day, hopefully that won't trigger, right? I'm not being funny, but look at the reward on this. Let me just draw a fib on it. Actually, I haven't got a fib. There. Risk is 20. We're sitting at 2,500. I'm struggling here. That's 4. 8. 12. Brain's gone. 14, 15R. Yeah, if you'd have held it. Now, I've also done tests on TP levels. This is an anomalous day. Most of the time, as we know, it will not get outside of ADR. This is way beyond ADR. Market spends 58% of its time within ADR. So these days, yes, you could clear up. But if you do not take profit, most of the time what it will do is it will do something like that, and you will close it out here rather than there, taking a third of the profit you could have achieved. So although this is an anomaly, but what I want you to see is when we get to the end of the session, that disappears. So all old orders that are left in play are automatically removed at end of day. If this was open, i.e. price had done something like this for the entire day, it would auto close that order there as well. Any open positions, regardless of whether it's in profit or whether it's sitting in drawdown. Yeah, it just closes it. We want out end of day. Okay, so that's the functionality. So it's a very simplistic version of the ORB strategy, and the ORB strategy that I have running with the opening range breakout EA is a lot more complex than this. It does multiple attempts to get in and out of the market. So there you go. You can see we've got another break to the upside. So here we had the opening range put in. We actually triggered short, stopped out on the short, then the market went long, up to target. Yeah, so we took a 0.1 loss and a 0.4 win for our risk reward. I think it's set on 4R. So that's basically the operation of the EA. So these are the tests that I've done so far. Obviously, because this is the Swiss Army knife EA, there's a hell of a lot of stuff in here you can test. Lots of stuff. Trailing stops, timed exits. You know, there's a lot of things that you can test with system parameter permutations. But the more permutations you test, the more moving parts of the strategy, the less reliable it's going to be moving forward. The fact I like this variation that I'm using at the moment is because there's not many variables. So it is a case of what size stop, what size TP, how big should the maximum range be, and should I delete pending orders and only trade in that direction? And it doesn't matter. These are irrelevant, really. So let's just look at some of the results. So this is the DAX. So out of the 432 tests that we've got here, we had 1, 2, 3, 4, 5, 6, 7, 8 variations that didn't work. Yeah, out of 432. So it's pretty much 100% strike rate. Yeah, it doesn't matter whether you used any kind of martingale, whether what stop size you used, what TP you used, what range you used, whether you deleted them or not, or whether you went in the direction or not of the opening range. Over a year, it generated profit or broke even. Worst case scenario. There were 6 times it would have made a loss. And look at the martingale factor. Those are the ones you weren't trying to get your losses back on. It's interesting results. So the upshot is, if we go back up to the top here and look at the very, very best case scenarios, which are kind of top 50 odd results, trading in the direction of the open, these are all set to 0. So it's saying basically, if you get a green candle, it doesn't matter what the color is. You don't have to trade in that direction. If it goes that way, fine. But if it goes the other way, go that way, because that's the way the momentum's going. Also, if you went and traded only in that direction, you would also make money. But the interesting thing that I found with this is, I'm not sure if you can see here, but let me zoom in a little bit. If you look at these results here, where you trade in the direction of the open, okay, look at the difference that really sticks out like a sore thumb. Drawdown. Every time you trade only in the direction of the open, the drawdown is exponentially larger. The return is also exponentially larger. So what it's telling me is, if you only go in the way of the open, you're going to miss a load of those that work, right? Which means that you're going to basically get stopped out much more, and the loss basically will, or rather the strike rate will suffer dramatically. But it does make a lot more money. Yeah. But it's the whole risk reward ratio. Yeah. The return on drawdown is 4. There's plenty of ways you can do the same return on drawdown, not trading in that direction. So it doesn't really make any difference, does it? What I'm interested in is less drawdown on my account, and ideally a higher strike rate. But unfortunately, because it's a 50-50 style strategy using a positive R ratio, it's never going to get much more than 30%. If you go back and look at the members streams from when we looked at if you haven't watched these, they're worth watching. When we did strategy development, we did a lot of sessions on strategy development, testing things and how to do system parameter permutation testing. And there was one session in here which was to do with, I'm not going to be able to find it now. Is that not all the videos? Oh no, there's loads more. There we go. Oh, Christ. Yeah, so these are the strategy development ones. It's to do with basically the strike rates on different types of strategies. Anyway, you have to whiz through them. Oh yeah, 3 types of indicator. Oh, I can't remember. Was it to do with probabilities? I think it might have been the probabilities session. That one. Yeah, I think it might have been to do with that one. But basically with the with all strategies, you have a strike rate associated to them. So with a breakout strategy, if I could type, with a breakout strategy, a trend strategy, and a mean reversion strategy, those are the only three strategies that exist. These two will both have strike rates typically around about 33%. Mean reversion will tend to have a strike rate of 60+%. It varies obviously quite a lot, but the reason these fail is because the market spends the majority of its time in balance transacting orders, which is mean reversion. And so anything that is a mean reversion strategy works in this market state, which is where the market spends the majority of its time. When it's breaking out, it mean reverts before it continues to a trend, and a trend is full of mean reversion. Yeah. So this is why the strike rate, and why most traders are better off being a mean reversion trader or using mean reversion strategies, because the market does it in breakout mode, trend mode, and range mode. In these modes, when you're breaking out and pulling back, you're going to get stopped out a lot. Yeah. And in trends, when by the time you've identified them, are ready to finish, which is why people struggle to get onto trends, which is why the strike rate is so low. This is a breakout strategy. Therefore, your strike rate isn't going to be very easy to get above 30-35% because it's a breakout strategy. It's going to stop out a lot because it's going to be wrong a lot because the market spends most of its time going sideways. Yeah. So it doesn't make any difference which one of those you use. It doesn't really make any difference which one of those you use. You can see in the top results here, whether you delete the pendings or don't delete the pendings is mixed. These are all deleting. These are not deleting. These are deleting. These are not deleting. These are deleting. These are not deleting. Doesn't matter. Yeah. What I'm looking for in system parameter permutation tests is this is definitely what you want to do type result. So if every single one of these results in the top 50 said, do not trade in the opening range direction, I ain't going to trade in the opening range direction. And if I see a correlation when I scroll down of all the zeros suddenly turning into ones at the bottom, that tells me that that is not a good thing to do. Therefore, we scrap that and we go ignore that as a filter. Yeah, but these are mixed all the way down, so it doesn't matter what you do. But the range size is the one that was really of interest to me. So I did an initial test here on the NAS with 2,300 system parameter permutations. Okay, so I was testing the same parameters, but I was testing a lot of different variations. Yeah, so with my martingale factor I went from 1 to 2 as normal, but with my ATR stops I was using 1, 2 and 3. No, that was the same. ATR TPs 3, 2, 1, but the maximum ranges I wanted to test 1 to 4, so 10 to 40%, and then those. Now when I went to do the next set of testing, I whittled it down to being 3s and 4s only here, and TPs above 3 only, and maximum of 5, and then my ATR stops from 0.1 to 2. Yeah, so this initial test had 3 parameters in it. What I found was if you use an ATR, if you use a stop loss of 0.3, yeah, you can see these are all 0. You probably, I don't know if you can see, probably really small, isn't it? But all of these are 0.1s, 0.2s. Yeah, you get the odd 0.3 scattered in there, but the 0.1s and 0.2s all appear at the top of the results, meaning that it's a good thing to use a small stop. As you go down, there's 2,000 results here, but as you go down to the lower ends, you'll see a lot more of these 3s. Like the majority of the results are 3s. Meaning that if you use a wide stop with the opening range breakout strategy, it's less effective at generating profit. Equally, if you use a large TP, i.e. you go for the runners, you go for the 10Rs, yeah? If you use that, it doesn't generate much profit. But if you use small stop losses, tight, somewhere between 10 to 20% of the range, and you only target somewhere between 30 to 50% of the average daily range as a target, meaning that you've got a maximum of 5 and a maximum of 2, giving you 0.7, which is 70% of today's average range, you immediately have a 58% chance or higher of achieving that result, not getting stopped out and getting to target. So it puts the odds massively in your favor by actually keeping those tight stops, which is, as I've shown you today, something that is going to happen a lot. If you've got a range that is 0.3 as a maximum, so if you're saying the opening range can be 30% of the average daily range, and I set my stop loss at 10% of the average daily range, it means that my stop's always going to be above half the range, which means that if it breaks and retests, I'm going to get stopped out all the time. But what the whole purpose of this is on these clean breaks, we want to make sure we get a nice 3 to 5R every time. Yeah. So keeping that tight stop means your target is tight. If the stop's down there, the target is way up high, out of reach, beyond ADR. You can't get to it. So the maximum range I tested from 0.4 down to 0.1. As you can see, at the top here, they're all 0.4s and 0.3s. 0.4s, 0.3s. There's the odd 0.2s in there, but 0.3s, 0.4s, 0.3s, 0.4s, some 0.2s. But you notice there's no 0.1s here. Yeah, it's not good to use a tight range. So you need to give the market, the 5-minute ORB, some room because there's a lot of volume coming in. It's going to be a big candle. So if you look at the low results at the bottom, all of the range multipliers down here, or a majority of them, are 0.1s. Yeah. So it's saying tight ranges mean that you're not going to get be able to get a decent return on breaks that you get. The other problem with using tight ranges is the number of trades taken can dramatically reduce. You won't get any trades because it doesn't do 10% of the average daily range very often. It does more than that. Yeah. So with SIH, my research showed me that using a range somewhere between 10 to 20% was good. Now, the reasoning behind the lower end, which is the 10%, is I don't want a tiny little candle where I'm immediately on the open going to get whipsawed. So the idea is I want some movement on the range so that I've got a chance of it not whipsawing on the first 5-minute ORB. The second one, the maximum range, is I don't want this to be too big because otherwise I'm never going to get to target. So I set it at 20. Now, it's actually showing in the results that 20 is good still. You should still be using 20. That's nothing wrong with that. But 30 to 40% of the range is actually just as good. What this seems to be indicating is if it moves 30% of the opening range within the first 5 minutes and it breaks long, you tend to end up with a profit. You won't necessarily hit the profit target. Some days you will because it's got to go really pretty much to ADR, which is a 42% chance of it doing anyway. But because it's had such a strong break and it continues to go that direction, what tends to happen is you take some profit. So it closes out end of session with a profit, or it hits your stop loss straight away. Yeah. So I've done the testing on follow-up tests to use just either a 3 or a 4, because it means I only have to do 400 tests rather than 2,000 to get the results in. And the TPs, I've said I'm only going to use TPs. Let me just stick a filter on that. I can't remember what the actual yeah, so TPs of 3 to 5. So I'm only looking for a maximum of it moving 50% of the average daily range. Yeah. And my stop losses, I'm only using 0 and 2, which were the two that came out on top. But I decided to put a 0.15 in the middle just to see if there's a slight edge in using a 0.15. But as you can see here, to get the best results on the S&P 500, using a ATR stop of 20%, 15%, yes, 20 and 15 is what you need to be using. So 0.1 actually starts to get less profitable. So on the S&P, you need a slightly wider stop. Reason being is the S&P moves a bit more slow and fluid, whereas on something like the Dow and the NASDAQ, it says you want a really tight stop. So a 0.1 and a 0.15 is better to use than a 0.2 because the NASDAQ is like a steam train. When the opening range goes in, the thing just takes off. Yeah, so it makes sense to use tighter stops on the NAS than you do on the S&P, because the S&P takes its sweet time about getting anywhere, and so it's going to be a little bit more rotational in its movement, whereas the Nasdaq is going to be more parabolic. The DAX and the Dow are very similar as well. So with the Dow Jones, 0.1 and 0.15, so using very tight stops is the best thing to do, and just get that break and get that money in the bank fast. So it's a very quick scalp. With the DAX is a lot slower, as we know, in movement. It's a bit of a slug. So, and the FTSE, I think, I haven't tested the FTSE, but the FTSE will probably be the same. We want a wider stop on it. Yeah. But the targets, somewhere between 0.4 and 0.5, and if it breaks, we basically either get out of end of day, or we manage to hit that target, or it stops out. So range multipliers and everything. So the upshot of all of this is using somewhere up to 40% of the average daily range as a variable is fine. No downside. So that initial ORB is never going to be tiny, because it is the open. The pre-market I want to worry about, but this is just concentrating on that first 5-minute candle. It doesn't matter if it's anywhere between 30 to 40% or under. Yeah, so I can set that at 40 and be comfortable with it. You can see there's a massive mix of results. There's 3s and 4s all the way down that column, so it doesn't really matter which you pick. Your TP, you're going to make more money if you let it go further. So using a 0.4 or 0.5 of ADR, so half an ADR to 0.4 ADR, is absolutely fine, because we are setting this at 0.3 or 0.4, meaning that we're getting a positive return anyway. So we want it to go twice as far as it did at the open. That's all we're saying, and then we'll be able to get out. We keep our stop nice and tight. So our stop is always going to be inside the opening range. So maximum 0.2 ATR is a stop, but it will either be roughly the range or within the range. Now, sometimes it will be outside that range, because we might get an opening range of 0.1 and we're using a 0.2. Yeah. So it really doesn't matter, as you can see with a lot of these settings. It's just finding the right one for each instrument. Now, the martingale factor is the interesting part. So the way that it works, don't know if we can see the results of this. Yeah. Oh. So you can see here, oh no, that's not using martingale, is it? Let me just bring that back in. Oh, why is the tester not attaching? There we go. So what we can do is we can test martingale. Where are we? Oh, I'm using 0.5. That was stupid. That should have been 1.5. I was going to say, why did that take 1 lot? So I was starting with 2. So if we run this, I'll show you how this works. So, and this is something that is obviously much more dangerous to do. But thinking things like prop, it makes sense that we know, because of the strike rate of the strategy, and we know that we do get nice clean breaks every now and again, or two times a week, usually 3 times a week. We are going to have the opportunity to get much more size on if we use some kind of martingale multiplication. So I wanted to see how that affects the results in the strategy. So if we just whiz this up, make it run. So there we go. So here you can see we've taken a 0.2. Sorry, a 2 lot short and a 2 lot long. Yeah, so both exactly the same size of order. If they both get stopped out, they both turn into losses. So we've made a $38 loss there, and we made a $38 loss there. So we've lost $77. That's fine. So that's today's done. Nothing worked. Yeah. So it's stock index hedge, but we're using stop losses. Yeah. Then we move on to the next day. And the next day's trades are taken at 3 lots, 1.5 times the original size. So we started off with 2 lots. We're using a 1.5 multiplier. So now we're taking 3 lots. Lo and behold, we lost $77 yesterday. Today we had a clean break, which we're going to get 33% of the time. We made $221. So we've recouped yesterday's losses and banked $144 as a net profit on the 2 days. Now we got that short on. There are days where you do that, you hit that, and then it pulls back. And the reason that deleting this is not necessarily a good idea is there's 2 things are going to happen now. It's either going to trigger that short and stop out and lose $38. Who cares? We've hit target. Or we're going to get a parabolic news event, which is going to trigger that, and it's going to make us another couple of $100. Yeah. So bear in mind, in the US, we have a news event happen at 3 o'clock in the afternoon, right? So news in the US is 1:30 and 3. In the UK, it's 7 a.m. and typically 9:30. So the DAX is affected at 9:30. When we get that initial break, if the initial break happens and gets to target within the first 30 minutes, and then a news event occurs, which triggers the opposite trade, you get 2 wins in a day. If you delete that when the opposite order is triggered, you won't win that one. But there is a possibility you could get stopped out and lose another $38 in this case, yeah? But we still make a profit on the day. So the reason that being left in there is probably a good thing, is because we get a chance at making twice as much money. So we'll let that one play out. So that's taking 3 lots, closed out the pending order. So then we get through to the next day. Okay, and now you can see we're taking 2 lot trades again. Yeah, so we're taking 2 lots again now, because yesterday we were taking 3s. We got a profit. Therefore, we reset back to normal. If yesterday had been 2 losses, today we would have 1.5 multiplied that 3. So we'd be taking 4.5 lots today. But we got a nice clean break there today. So we broke short, stopped out, lost $40. Now we've got a clean break long. Don't know if this is target or not. I can't remember. Target, banked 124. So we're now up to 68 on 3 days. Yeah. So that's the logic. If you were in the live room with me yesterday, you saw me trading the Dow and the Nas with this exact strategy, and I made $392 yesterday, because on the Dow yesterday, it broke long, stopped out on that, broke short, stopped out on that. So I took a $600 loss there. And the NASDAQ yesterday was a clean break long, and it went straight up to $1,200. So I've banked 400 because I did actually take another one on the Dow, which didn't work out. But I only took the other one on the Dow because I had capital. So I lost another 200. But up on the day, because the way that this strategy is traded with the risk, using the tight stop and the reward and the probabilities of breaking out, and this is where the edge is in the ORB strategy, which is why I trade it, is that basically with this type of strategy with a stop loss, the only way you really lose is if you have multiple whipsaw days on every instrument. If you get one instrument breaking and one instrument whipsawing, the one instrument that breaks pays for the whipsaw. And this is the same as the stock index hedge strategy that I trade. And this is why I like this one more than the stop loss version, because that's $230, but it gives me an opportunity to get out later. I haven't lost anything yet. I'm still in it. It just hasn't decided which way to go. So I'll wait for it to decide, and then I will look for a trade to take to get out of it with a profit. This one is clean broken long. Still can't decide where it's going today. But if this one hits target and gets to 3R, that is going to be more than that, which pays for each other. But the key is to just limit the number of trades taken to give you the edge. The current opening range breakout strategy breaks, retests, tries, and it can continue trying all day long. And if it does that all day long, you will continue to lose all day long. With this variation on the strategy, it just takes 1 trade long, 1 trade short. So it's a much simpler version. So looking at the martingale results, you can see that it's a mixed bag, an absolute mixed bag. But the main thing that the martingale factor affects, and I call it martingale factor, but obviously it's just lot multiplication. Martingale is 2. Anything lower than 2 is just lot multiplication, loss recovery. So the very, very best return on drawdown is using a 0.2 stop, a 0.5 target, either range, doesn't matter, and not deleting the pending or trading in the direction of the open. If you don't multiply your lots, you're going to get the best return on drawdown, because you're not going to get a lot of drawdown, because you're not going to lose a lot of size, and as long as the strike rate's high, you're going to bank a load of cash. So $1,000 drawdown made 8 grand. This is just using 2 lots. Obviously, if you want to make 2 grand a drawdown and make 16 grand, you just double the lot size. It's all using fixed lots so that it's replicable at any size account. Increase that to 1.2 as a martingale factor. You take a bit more drawdown, you make a bit more money. And you can see all these results. Basically, lower martingale is the best thing to use, but also higher martingale. Now you're talking about making 50 grand, but you're going to take 12 grand's worth of drawdown, and making 121 grand with 27 grand of drawdown. These percentages, obviously, I've just based this on a 50k account, but the percentages are irrelevant. If you wanted to make 121 grand last year trading with that set file, you would have needed a 30 grand account to do it, and it would have been scary as hell because you'd be down to 3 at the end, at some point. But you might not have been, because that is the overall drawdown. So if you started a 50k account there and it went really, really well, and you got up to 75 grand, what that's saying is it would draw down to something like 40 odd grand before it jumped up to 120. So the only way that is super scary and dangerous, that 27.5, is if you're using a 30 grand account and that whole 27.5 happens straight away. You're stuffed. If you make profit and then it does the 27.5, it's not a problem, is it? So you need to do some analysis in Quant Analyze to see how that came about. But that's 121 grand return. Yeah, it's a 4.5 return on drawdown. Yeah, so there's your drawdown. That's 4.5 times higher than it would have cost you to get the trades on. That's what it's all about, return on drawdown. So the martingale factor, the 1.8 there made 30 grand off of 7 grand. The 1.4 there made 13 off of 3. But you can see it doesn't matter too much if you use martingale or not. It's a personal preference. It's aggressive or conservative trading. Conservative trading won't make as much money. Aggressive trading will make more money, but it will be scarier to do. And it's something that you would have to sort of decide on yourself. But it doesn't really matter. What is more important is you just get the trade on, regardless of how big that opening range is, within reason. The reason I'm not going above 5 here is because if you let it move half of its average daily range in that 5-minute candle, it doesn't work. It just doesn't work. You just can't get any more movement. It's done it. Or it's one of those days where you've got a parabolic move that goes 500 ADR. It's just, they are anomalies. We're looking at what is the norm, what is going to happen the vast majority of the time, because that's what we want. Yeah. So using not too strenuous TPs, 4 or 5. So that one there is a 2R. Yeah, we're using 0.2 loss. We're going for a 0.4, which is a 2R. That one there is a 2.5R. Yeah. If you used a 0.15 and a 5, that's something like 3 and a bit R. Yeah. So we're not going for a lot. We just want to get the break and make 2 to 3 times more money than when we don't. And that's using a strike rate of 33%, which gives you the edge. That's it. So there you go. So it's not the strategy that that document produced, but what I've done is I've used the standard ORB, using this as the relative range, the relative volume style filter. So what we're saying is we want to see if it's better to use low or high movement at the open. So low would be low volume, high would be high volume. And as their document suggests, the days where you get bigger moves at the open, higher volume, actually generate more profit, because it's harder for the market to retrace when it's had a large move placed into it. And because there's a large move placed, we know there's high volume and high interest, which means that the market tends to have a volatile day. So what this filter says is, are we having a big, fast, volatile open? Yes, let's trade today. If it's above that, something's gone wrong, but there is no real downside to use. So the actual downside filter that I used was 0.1, I think. Let me have a look. Basically, I used this filter as well, which was the minimum maximum range size. It's the same one as used in the stock index hedge. So I set it to 0.01. Yeah. So basically saying, I don't care what size the opening range is. It can be virtually nothing up to 30% of average daily range. Yeah. Because I tested this downside filter from 0.05 to 0.2, because I was testing up to 5. So I was saying it needs to be at least 20% of the daily range or variables below it. And it made Virtually no difference. What it did do was restrict the number of trades down to virtually none. We had years where we were taking like 19 trades a year because we were saying we need the market to have moved 20% of its average daily range at the open. Yeah, doesn't happen often. So it actually doesn't matter, that downside, because at the open, you're going to get volume. You're going to get some kind of range. It doesn't matter how big it is, but you're going to get some. But there is an upside to it. Yeah. So that's the results. So my next steps on this are to retest other variables, mainly trailing stops. And I'm going to put together not so much a perfect set file, but an ideal set file for each. Because obviously, as we've identified, the DAX and the S&P need slightly wider stops because they're much slower, more moving. So the more parabolic ones, like the Dow and the NAS, you want tight stops and get in and out fast. With the S&P and the DAX, you need to let them breathe a little bit more. DAX obviously doing exactly what it does today, which is this sort of stuff. Yeah, it will go at some point, but it's never in a hurry, is it? Yeah, the DAX isn't that sort of instrument, whereas the NASDAQ is that sort of instrument. This is the Globex session. We're not even open yet, and it's already off. Yeah, so totally different instruments need slight variations on the strategy to make them more effective. But there is going to be no better or worse one. So there'll be days where you would use one setting and you'd go, oh, if only I'd use the same one as I use on that. Because every day is different, isn't it? Yeah. So I'm going to do some more development on it. The main thing I want to test on it moving forward is the trailing stop scenario. So I want to test taking the open break. And when we get here, I want to test trailing that. So that on the days where it doesn't get to target and then comes back and stops us out, what I'd rather do is stop us out with no loss rather than loss. Yeah, and see if there is a differential between profitability using a 0.15 stop, for example, and trailing that 0.15 to break even once we've moved 1.5 or 2 in our direction, seeing if that actually stops the profit being achieved. If that has little impact, making that small trail on actually getting to our target, because most of the ones we do hit target with are fast moving and don't pull back, then it makes total sense to reduce that risk, which means it may give us a higher return on drawdown. So that's the next test that I'm going to run. And as you can see, as usual, the problem with system parameter permutation is not, is it profitable? It's which of the 400 of the set files do you pick? They all work. Yeah. So again, it's never going to be a right or wrong. It's going to come down to comfort levels with return on drawdown. But I'm probably going to start to forward test this. This is a totally different EA. It uses different logic for SIH. It uses different logic to the standard ORB because the standard ORB is using 3 different time frames, analyzing them. The SIH has the minimum range, maximum range analysis, which the ORB doesn't have. So this is kind of a hybrid EA, which takes kind of the best bits of both, but simplifies the entire strategy down. The next step as well, which I will also be testing, this is all based on 5-minute ORB. So the next stage of testing is also to test the other ORBs. So we've got the 5-minute ORB, the 10-minute ORB, the 15, the 30, and the 60. 30 and the 60, when I did the initial testing, I have already tested those to death. The research document that I've just shown you actually backs up my findings, which is they don't work very well here. So this is the 5-minute ORB, 15, 30, 60. So 1600% return, 270% return, 21, 39. Yeah, S&P returns 198. So basically the S&P is the buy and hold strategy. Every day you buy the S&P and you hold it until the end of the year. What would you have returned? That. This is what Warren Buffett does. So what we're looking for is there something that can get us a better return on just buying the S&P? Yes, but it does not include the 30 and the 60-minute opening ranges. So I've got a variation on this that I'm going to test, which I think might work, which is to use multiple ORBs and trigger new orders every time those ranges are achieved. So if we get a 5-minute ORB and we break long and stop out, yeah, we now have a 10-minute ORB. So that was the 5. Now we've got a 10-minute opening range. So we reset the orders on the 10-minute opening range, and now we use that. And if we don't get anywhere on the next candle, we now have a 15-minute opening range, and we use that. So we take the 5. If there's a trade on or a pending order, meaning we haven't triggered an order, we leave them where they are and wait. If we have triggered an order and it's stopped out, we use the 10 or the 15. Or if we have triggered an order and it's still playing out, we ignore the 10 and the 15. So it gives us multiple bites at the cherry. So if the 5-minute ORB works, job done. The 5-minute ORB fails, we'll try the 10 or the 15. That's it. If the 15 fails, we're done for the day. Yeah. So there is a way to enhance the strategy by not just taking 2 trades a day. If there is an opportunity arising, that's a perfect example. Absolutely perfect example. If there's an opportunity arising to take more than one opportunity, we can do. So you've got your 5-minute ORB there. Yeah. It's the same as the 10-minute, but the 15-minute is there. So we took a trade here on the 5-minute ORB short. It stopped out straight away. So what we can now do on this candle is reset ourselves to the 15-minute ORB and now wait and see if we now get a breakout on the 15, which we did, and we went. Yeah, that happened to be the same as the 5 that day. So there is an opportunity to enhance that. So I've got the coding already put in there. And again, that is something new that I will have to test and do parameter permutation testing on. There we go. So that's it. So that's my findings on it. I know it works because I trade it every day. And I did trade it 10 years ago when I was trading stocks. So I know the strategy works and it's got an edge, which is why it's so popular. But it's about maximizing the edge and looking for ways to enhance it, really, either by reducing drawdown or increasing profit. Strike rate, you can't work on. It's a breakout strategy. It's never going to have a big strike rate, yeah, because it's random. And this is what their approach was to let's go in the direction of the open to increase the strike rate of the strategy. Will work with stocks, won't work with indices. And I'm not interested in trading stocks, to be honest, because it's just a lot of work. It's an absolute minefield of, and it's very difficult to as well automate, like I said. So you tend to have a watch list in stocks of 5 or 10 stocks you trade on the day. A lot of people have a watch list lower than that. Some people have sort of 10, maybe 15 stocks. But order execution is a case of watching them all, which is why you see these people with these massive screens like I've got, which you have like 15 charts up with different stocks. It is so hard. And you're trading 5-minute charts. So you've got to be quick, you've got to be agile, and it's a pain in the ass. Yes, there may be a high return and reward in it, but there's easier ways to make money, which have got a lot less strain on you as a person. So, and this is obviously one of them. So there you go. So that's the ORB findings. 930, not bad. ORB does have minimum and maximum range settings. Are you talking about something else? Does it? I can't remember. Maybe it does. I haven't used opening range breakout for such a long time. I can't even remember the inputs. Yeah, it does, but they're not dynamic. So the minimum maximum, yeah, you're right. No, the minimum maximums in here are not dynamic ranges. Can't even find them. There. Yeah. So these are entered in distance. What I'm using in the SIH is a dynamic range. So basically it uses ADR. So what it does is it adjusts with the volatility of the instrument. So if the NASDAQ is on fire for a few months, your ADRs would increase. Therefore, those range sizes need to increase. So this is what the ORB strategy is. This EA is great, but it is a little over complex in the way that it works. The problem I have is I can't recode this to make it work like the SIH, because everybody that's using this, it will change all their logic usage and it will change all of their strategy, back testing, everything they've done, they'd have to scrap it all. So it's not something I can really recode. And it works in the way that it works, and it does its job in the way that it does its job. It's a variation on ORB, which is successful, but I think there's ways to improve it, which is if I follow this route and get a new version out, it would be ORB version 2. It would be a separate thing because it's going to work differently. It's along the same sort of lines though. A bit like the SIH, you know, everybody moaned at me when I released the SIH EA saying, oh, you just want to sell more stuff because it's the same as the opening range breakout strategy. Why can't you make that do that? Because the calculations and the functionality are totally different. It may look the same, draw lines on the chart, but the way it's calculating things, the way it's operating functionality, using pending orders, using stop orders, using market execution orders, measuring distances, it's all completely different. So it's a bit like the evolution of the iPhone. iPhone 1 did this, and then they went, oh, that'd be amazing. What they didn't do was release a software update for iPhone 1. They built iPhone 2. And then they went, hey, if we change the way that that does that, we could make it more effective by putting this on it. All right, iPhone 3. Yeah, I try as much as I can to update my products rather than doing things again, because obviously there's a lot more products, there's a lot more support involved for me. I'd rather have one thing that does everything. But you realize after you build something and you release something and you use something, there's a better way of doing it. But problem is, when you find the better way of doing it and you try to implement the better way of doing it, it has a knock-on effect on something else. And then if you need to change that thing, it has a knock-on effect on something else. By the time you've got here, the functionality is totally different, and every backtest you've done is giving you different results, which is unfair on everybody that uses this on a daily basis. Yeah, so it's got to be slightly different in the way that it works. So if I decide to go this route, this is part of my diversification plan, in, you know, just not using position trading, using different strategies to diversify my portfolio and my income. So this is part of that. So having SIH running is great alongside position trading, but if I had a stop loss based opening range strategy as well, that would diversify further. What it would mean is the days where SIH has clean breaks, ORB would have clean breaks. But sometimes ORB would outperform SIH because it would get a second break that makes profit as well. That adds diversification into the portfolio. The SIH, when it hedges, would be a double loss in the ORB, but the hedge exit would pay for the ORB strategy. Yeah, so it's about using diversification so that you're covering almost every market outcome for the day, if possible, that it doesn't matter what the market does, as long as you have a positive return on each strategy, one of them is going to pay you every day. They won't all fail. If you have a range bound day, yeah, your trend breakout strategies aren't going to do well, but your mean reversion strategies will. So as long as you've got a breakout strategy, a trend strategy, and mean reversion strategy running, it doesn't matter what the market does today, does it? Yeah. If my range breakout strategy is failing, my trend strategy is selling the highs and buying the lows and making loads of money. Yeah, so it's all about that diversification, which is what I'm looking to get, and also diversification across markets. So I don't want to trade anything but indices, because as soon as you get into the stock realms, you open up a 7,000 new instruments to trade, and it becomes what market cap do I use? What ADR filter do I use? And there's a billion variations that come into stocks, which is why it's so hard. Have they got earnings today? Should I trade them because they've got earnings, or should I leave them because they've got earnings? That sector's rallying at the moment, so should I include those stocks or should I exclude those stocks? It's so complex. Indices are great, goes up and down, that's it. Yeah, I don't care. Is tech stocks going up? Brilliant, I'll buy the index. I don't need to worry about the individual tech stocks. I don't need to worry about whether their CEO has just been caught doing this, that, or the other, or has paid a backhander to Donald Trump. The NASDAQ will go up or down. Yeah, but he's only one part of it. That's why I like the indices more than the stocks in their own. But anyway, that's me. Everyone's each to their own, aren't they? I use ORB EA on futures on MT5. Yeah. Yeah, so Vitaly, you're a prime example. If I suddenly recode all the ORB logic to do something different, i.e. not be a fixed input, but being an ADR variable, none of the stuff you do at the moment with that EA will work. So I can't do that. And I could put the option of doing this or that, but that adds 500 extra inputs, which means everybody new that gets the EA will go, what's all this mean? And they all get confused. So it's about keeping it simple. Everything's got to be kept as simple as possible. And everything, it's like having the right tool for the right job type thing. Yeah, you don't use a sledgehammer to crack a walnut. You use a hammer or nutcrackers. Yeah. You don't use a JCB to crack a walnut, is what I'm trying to say. Yeah, ORB is very complex. This is super simple. There's no point in doing anything more or less, is there? So, right, there you go. That's it. Anybody got any questions on any of that? Anybody still awake? That was quite a long session, but I wanted to do it in depth because I wanted to explain what I'm doing, which is what I always do. Let everybody know exactly what I'm doing and why I'm doing it, because if I don't, you have no idea. Just looking at what's happening. NASDAQ, the FTSE's back at the opening range. We are retesting it. So no volume really today. Rotation day. Obviously we've got US news, but that shouldn't really affect these two. They're just not moving today. Difficult morning. So I'm going to do more testing on those. No questions. It's either no questions or no one's here. One or the other. So that's it for this morning. I need to rewatch this session more than once. Probably, yeah. But yes, hopefully that's useful and you understand why. It's more about, I think for me, it's more about explaining why I'm doing what I'm doing rather than just telling you what I'm doing. Because I'm a firm believer in you need to understand anything that you trade or anything that you do, which is why I give all the details of all the strategies out that I build into my EAs, because I've been down the same route as probably all of you, where I've bought EAs, put them on a chart and gone, wow, that's amazing. Ask what it does. No, I can't tell you that. It's a secret source, mate. Well, what does it do? How does it work? No, not telling you how it works, because then you'll copy it. It's like, well, all right, well, I'm not going to use it then, because I'm not going to stick something on my account that basically places orders if I don't know what it's doing. You need to understand the strategy in detail to understand why the mechanics of the EA do what the mechanics of the EA do. If I tell you that hasn't got a trend filter in it, everyone will say, why has it not got a trend filter in it? That's ridiculous. But when I explain why it's not got a trend filter in it, because it's a momentum breakout strategy, which has nothing to do with yesterday's price action, it makes sense. Yeah, so it's just about clarity, I think, which is what I think this industry lacks dramatically. Would you be interested in testing the new ORB EA when you get it done on futures on MT5? It's the same thing. Yeah, you can. You would be interesting to test it. Yeah, but it's the same whether you trade CFDs or futures. It's the same because the price action is exactly the same on futures. Yeah, if you look at the NASDAQ now on a 5-minute chart here, and that price action, and then you look at the NASDAQ here on that 5-minute chart, it is exactly the same. Three-bar reversal, inside bar, spinning top, bull, shooting star. Obviously, this isn't moving because it's a screenshot, but you get the point. So yeah, it doesn't matter whether you're trading futures or whether you're trading CFDs. CFD matches the futures price action. Price action. What did I say that weirdly for? Price action. The difference is the price. Yeah, the price quoted will be different, but the price action candlesticks will be exactly the same by the tick, virtually. So whatever works on CFDs in MT4, MT5 will work on futures in MT5. Yeah. So, it doesn't matter which you trade. It's the same thing. We're trading the same thing. We're trading the NASDAQ. So the Dow, look, big, strong spike up on the Dow there on the 5 minute. Same thing. It's all the same stuff. So you don't need to worry about what you're trading on. The advantage to trading futures is spread. Yeah, futures is a tick. But futures, you're paying commission. Here, I'm not. I'm paying a spread. But I just hope you will get it released for MT5. Yeah. I mean, if I release it for MT4, I'll release it for MT5 because it will. Yeah. I don't hate MT5. I just prefer MT4. I just hate not being in control. In MT5, I've not got control over data as easily as I have in MT4. And I hate the fact that they auto update it. That's the thing that really gets my goat with MT5. And it doesn't happen often, but when it does happen, i.e. they update it and it breaks, I can't trade. My stuff stops working. That's the thing that gets me. Yeah, you can't have a platform that you make your living out of that breaks. It's like your internet. Yeah, I use my internet provider. I also have a backup internet provider because I've had 3 instances in the last couple of years where my internet's gone down for a day or more at a time. I can't earn any money. So I have a backup. With MT5, when they release something and all of a sudden your EA goes error, and it doesn't give you an error of any help, it just says, I've removed myself from the chart. And then you add it again, it goes, no, I'm not working anymore. It's like, why are you not working? MT5's just been updated. What have they done? I don't know. Let's go through the list of everything they've done. There's nothing in there that says about anything particularly interesting, but they've introduced a bug that affects one line of code that EA happens to use. It is a needle in a haystack. And you report it to MT5, and the support time is slow. And it takes ages for things to get fixed. So you end up having to do a hot fix for an EA, which then breaks when they re-release it. And you end up in this never-ending spiral of pain. I've been using MT4 for 15 years. It's never gone wrong. Not once have I ever had, hand on heart, touch wood, a problem with MT4. Ever. And that's the only reason I prefer it over MT5. Is it doesn't break. Yeah. I earn my living doing this. I need it to work. And I'm just not, I don't see the advantage of moving to MT5. It doesn't, at the end of the day, like I've just shown you, whether I use MT4, MT5, or this chart, it's the same thing. All this is doing is showing me what's happening so that I can make decisions, or plotting numbers into a database that an EA can extract to make decisions with. That's the end of it. That's it. So it doesn't matter what platform you trade on. You can trade on TradingView. You can use Top Steps platform. You can use NinjaTrader, MT4, MT5. You could use Web Terminal. It doesn't matter. You can trade from Excel. You can get Excel data downloads direct from the CME and create buttons in Excel to press. Just doesn't matter. But what you need is stability. And that's the thing, the reason I stick with MT4. That's the only reason I don't like it. And also the MT5 coding and the graphical user interface are different. It's like they rewrote an amazing thing to make it look slightly better. It's like they released the iPhone 10 after the iPhone 9, and all they did was change the color of the case. Oh, that's a nicer case, isn't it? Yeah. Ring, ring. Oh, it's still a phone. It's still a camera. It still browses the internet, but it's got a slightly nicer case on it. The graphical user interface on MT5 is slightly nicer. That's it. The backtester does more, but is uncontrollable with data. What's the most important thing in backtesting? garbage in, garbage out. You stick crap data in, you get crap results. Yeah, I need control of my data more importantly than anything else, and MT4 gives me that. Yeah, so it's just from a practicality point of view. I don't not like MT5. I just don't see a point myself. But if I hadn't been trading for 15 years and I came into this 2 years ago, I probably would have been pushed into MT5 by my broker for the first platform, and I'd never even know MT4 existed. And I would never know the joys of having stability. Anyway, I've been through that rant before, and I will continue to go through that rant until I die. That's all for today. Anything you need, let me know. I'll be in Discord. 1:30 this afternoon is news, so just be aware that's when we're going to get the volatility coming today. Yeah, and I'll update you on that as it unfolds, the ORB EA. Somebody's asked for a strategy session on something, and I can't remember what it was. It's gone out of my head. But for next week, I'm going to do a session on whatever that was. I can't remember what it was. Top-down view. That was it. So somebody's asked, you might find this useful or might not, I don't know. But somebody's asked for a top-down view. So they've been watching me do the zone trader analysis, and they've said, how did you learn to do that? I don't know. I didn't realize I was doing anything clever. But what I've understood and what they were asking is, how do you know where it's going? And when I actually think about the answer to that, it's not the skill of identifying support and resistance or the knowledge of knowing that that's what's always happened in the past. It's the fact that you understand the market is binary. So I'm going to do a session, hopefully next week, on binary movement and how to use fibs, how to use market structure, and how to plan a trade and decide whether a trade is good based on binary movement. So it was a long-winded answer to a very simple question, was how did you learn to do that? Which is obviously, that is an incredibly broad thing. So I will do a session on that, but I think it'll be quite interesting because that's the way I look at the market. Whenever I look at a chart, I immediately open it up and go, right, it's either going there or there. That's my instinct, is just it's going there or there, because it is. That's what it comes down to. Everybody tries to overcomplicate it by trying to measure this, employ that, look for that, do this, do the other. At the end of the day, it's either doing one or the other. There's only two things it can do. So it's boiling it down to the simplistic things and just analyzing it from that perspective makes life easy. So I'm going to do a session on it, which is probably similar to what I've done before, but anyway, it's more structured. Right, there we go. Anything you need, let me know. I'll be back tomorrow morning. We're going to do a review of the week. We'll see what Trump does this afternoon. Just be wary of that. 4 o'clock. I think 4 o'clock is really where the movement's coming this afternoon. But he might be nice and not say anything nasty. But this is Trump we're talking about. So highly likely he's going to upset everybody at the World Economic Forum. But anyway, we'll see what happens and we'll look at it tomorrow morning. Bank of Japan, if you've got any yen, be aware of that as well. So I'll be on after the Bank of Japan and we'll obviously see what impact that's had on the yen. So have a good day. Anything you need, let me know. Other than that, I will see you next time.